Hello nieces, hello nephews, it's your Uncle Charles here, and welcome back to my YouTube channel where we do unbiased technical analysis. And if that sounds good to you, please hit the like button and please hit the subscribe button and turn on that notification bell. It would mean a lot, alright? But we're going to start this off with the flow sentiment, which is, as usual, bearish, alright? Filter for 500k premiums or above like I usually do, and you can see 83% is in the puts, 17% in the calls. We don't fully know what the intentions of these orders are, but as of right now it's looking like big money is still bearish in the future, okay, as of right now. So we move to my Discord. I wrote like a nice little essay this morning for the group to read, but pretty much I had the bull case here and the bear case here. Pretty much the bull case was looking for calls above 390, and the bear case was looking for puts either when a support fails or below 387 to 385, 387 to 387.5 zone. Okay, move to the daily chart. 15-minute chart here, and you can see SPY on the first candle opened up, taking out my 390 support level. I usually move out and wait at least like 20 minutes or 30 minutes before I jump in the trade, but I guess I was a bit anxious today. It was a long weekend. It was only 2 days, but I was just anxious. I miss trading. I love trading. Sometimes that happens, okay? But I'm grateful that it worked out for me. All right, it's not like I randomly jumped in. I waited for support to clear. I took that out. And I actually just entered on the breakdown. I was really aggressive this morning, actually. Played it down to the next level. I had a support zone, 387.6 to 387. SPY dropped down to 387.5. I didn't quite take profits there. I tried. Sometimes the market moves fast. But I tried to get there, made a decent profit, left a small runner thinking, okay, well, looks like the bear case is in play because we opened up taking out a support level. Okay, and I don't care if the market goes up or down. I'm just going to follow the price action. Left a small runner, and unfortunately, I got stopped out on my small runner. Now, one of the other plans was looking for calls above 390. It did clear 390 here. Failed. Cleared again 390. I figured, okay, market already did a false breakout. Now they're recapturing it again, so there must be a way. This must be the time where they're just going to pop it up, okay? So I waited for the back test, entered on the back test, and look at that. Uncle Charles got stopped out and took a loss, okay? So 1 for 2 for trading today. This one, I did not follow my rules really well, but made some money. This one, I followed my rules as best as I could, but didn't make any money. Definitely not an easy trading day, especially when the market wants to base around like this. But it happens. Sometimes you follow your rules and it don't work out. Sometimes you get lucky and it works out when you don't follow your rules, okay? That's trading for you. Anyways, but overall you can see that the market just pretty much base or, consolidate for the whole day between a range between support and resistance and support level, which we identified as 387.5-ish, and we had a double top around here around 391.2-ish. Okay, so when we trade in when the market is basing or chopping like that, what you can do is identify the support, the support of the range and the resistance of the range, and then you use it as reference of when to enter. So calls would be off of support, puts would be off of resistance. Okay, what I like to do is I like to allow the market to base and just try to enter when it breaks out. Okay, not always easy to do. As you can see, I thinking the market was gonna break out 390. Didn't work for me. Okay, but had to respect my stop loss. Maybe tomorrow will be a much better day. Okay, because a lot of time when the market's moving, they either move in one directional move, make a one directional move, which is very easy to trade, or they base. But the basing sets up the one directional move, and the one directional move sets up the basing. Last Friday, we had a very nice one directional move to the upside. Okay, if we zoom out here, I know I have a lot of lines. I'll take them all out for you. But if you zoom out here, even though it's a 15-minute chart, but it's the same principle on other time frames. The market will move, will give you one directional move, base, which to trap both bulls and bears out, and then give you another one directional move, and then bases to trap both bulls and bears out. Even on the downside, when it heads to the downside, it'll make a strong move to the downside, base a little bit, strong move to the downside, base a little bit, strong move to the downside. This is how the market is. Right now, since June 17th, since around mid-June, the market's been giving us some strong moves to the upside, like a relief rally, okay? Because we are overall in a downtrend, okay? As of right now, strong moves since mid-June to the upside, and we are basing. This basing could set us up for more upside. If you go to the daily chart here, you can see I have this 23.6 retracement level around the 390 level. Okay, got my fib level starting from January 2022 high down to June 16, 2022 low. Okay, so for me to be bullish, I need to see SPY recapture 390. I think we did recapture it last week, 390.8 cents. Okay, so all right, a very weak breakout here, close below it. Okay, I need to see SPY above 390, and above 390 I will favor that we go fill the next gap. Okay, we do have some levels to watch out: 392 to 393 zone, 395, 398 to 397.5, and then the gap fill around there, 401.5ish, 0.7ish. Yeah, 401.5ish would be the next gap fill. Okay, so above 390 I am very bearish, but as of right now it's looking like the SPY is just basing, setting up for the next leg. Okay, now where is the next leg? Is it to the downside? Is it to the upside? Okay, I can't tell you guys for a fact if the SPY is gonna pop upwards or pop downwards. Okay, all I can do is help you identify key levels, support resistant levels, and talk about the possible scenario that can happen if that level gets taken out. Like last week I said, if we could take out 380, we can possibly fill the gap around 390. Now I'm saying if we can take out 390, we can possibly go look to fill the gap around 401.5ish. Okay, but it's not guaranteed that we will go fill it out. All right, when the market bases, it leads to one directional move, as I spoke earlier. That one directional move could still be to the downside, which is why we need to know where our support and resistance levels are, because not every move that clears a resistance leads to a big up move. But every big up move started with a resistant clearing, same way to the downside. All right, not every support that failed lead to a big move to the downside, but every big move to the downside started with a support that fails. Okay, guys? So with that being said, 390 is the critical resistance level. I'll be bullish above that, watching 392 to 393 zone, 395, 397.5 to 398 zone, then possibly the next gap fill around 401.5. As long as we're below 390, the next supports are 387 to 387.5 zone, 385, 383.5, 382, and then 380. Okay, a reminder that 380 is a very critical level. That is the 38.2 retracement level based on the March 2020 low to the January 2022 high. Okay, guys, I'm gonna keep it that simple. Watch out for those levels. And here's the VIX. VIX is still looking bearish. It opened above this downtrend line, this white downtrend line but it broke down again. It did not recapture that 50% retracement level. VIX is showing us right now that it has more potential to head down lower, possibly down to the next support at 25.45. Okay, if VIX have more room to the downside, it's possible SPY is basing to the upside, but that remains to be seen. Okay, triple Q. All right, got this downtrend line right here. This blue downtrend line. I'll make it thicker. All right, light blue downtrend line, and it rejected today. All right, this is it looks like a dark cloud candle. You guys know what dark cloud candles are? This looks like a dark cloud candle, which is usually a reversal candle to the downside. Okay, this dark cloud candle right there is when the green candle is a nice big body green candle. Then the next one is a red candle, decent body red candle, where it opens above the high of the green candle but closes a little above the opening of the green candle. Does that make sense, guys? It looks like a dark cloud candle. SPY look like it has a small dark cloud candle. Okay, I actually got it right here, dark cloud cover. Okay, that's a little picture of it right there. Definitely look up the dark cloud cover candle, because that's what it's looking like SPY has and Triple Q has right there. So for me to be bullish, we're gonna keep it this very simple. 295.5 is the breakout level of this light blue trend line. All Triple Q has to do to be bullish is break out of that level, okay, to put upside targets in play. Maybe we'll fill that gap at 299.3. Then the next resistance level around 302.4-ish. Okay, that's all Triple Q has to do to be bullish. Clear 295.5. As long as below, this could be another rejection combined with this dark cloud candle with next support at around 288.6s. All right, below that got 286.5ish. So you guys already know those are my support level. Triple Q, we got a reason dark cloud candle rejection from this downtrend line, and if it takes out support levels, that's your sign to enter puts. Okay, because that's when I like to enter puts, when support fails. Dow Jones, kind of a dark cloud candle, not quite. I'm not gonna lie. Gotta be unbiased. Not quite a dark cloud candle, but that 312.38 level did hold. Okay, for me to be bearish on Dow Jones, it has to take out that level. Did fill the gap here last Friday. That's good, and it did hold this breakout level, which means my next resistance is around 318.17. That's the beginning of this gap. And then the gap fill will be around 323. Those are my next targets. I got this red downtrend line. Breakout level is 323. It aligns with the gap fill. So we'll see if it tests that. If we reject, if we fill the gap and reject, not a good sign. Taking out support, not a good sign. It'll have to take a close above 323 to be bullish. Break out this downtrend line. Target more upside with 325 being the first level. IWM does not have a dark cloud candle. And it managed to back test. Okay, so IWM closed above 174.35 resistance level last week. It cleared that level. Today it back tested that level as a support and technically held, guys. All right, so for me to be bearish, it has to close back below 174.35. As long as it's above, there's a chance. The full gap fill is around 177.7. You go fill that gap with the next resistance at 180.7. Okay, so needs to stay above 174.35. If it falls back below, I will turn bearish. Okay, guys, so that's what I have for you guys today. Appreciate you guys so much for watching. The dark cloud candle was there. It's showing a potential reversal, but remember, gotta pay attention to the support and resistance level. When we take out support, that's when you look for puts. When we clear a resistance, that's when you look for calls, and you play it level to level, from a support to the next resistance level, or from the resistance level down to the next support level. You take profits. Maybe you leave a small runner. Don't let greed guide you. You know, no greed. Take your money and run level to level. And that's all I got to say. Peace.